Holy flippity flip flop flapping smokes, everyone. The markets today have made a huge U-turn and the market's absolutely tanking. And the reason why I think the market is tanking is a risk absolutely nobody's talking about. We are seeing a huge, massive shift in momentum in the stock market right now. We've seen a rally on irrational exuberance. The market was rallying for about a month. They thought that inflation was over, peak interest rates were over. And right now, I see a lot of market commentators are saying the reason why the market sold off today was because of high interest rates. Well, yes, that is true. There is another risk that happened over the weekend that absolutely nobody's talking about, or should I say, no stock market commentators is talking about, and how this is going to lead to a much lower stock market and be the biggest risk, I think, even higher than the Federal Reserve having to lift interest rates higher for longer. So everyone, why is the market tanking right now? And what is this new huge risk? Well, that's exactly what I'm going to go over in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. So look at this, everyone. Dow dropped 600 points in broad market sell-off as rates climbed to highest levels in months. So yes, this is definitely attributing to the market sell-off today, with the 10-year US Treasury approaching 4% again. We got the latest CPI data, the latest PPI data, and soon we're going to be getting the core, and they have all come in much higher than expected, which tells us that interest rates are going to go even higher than the market said, and they're going to stay there high for longer. And it's quite funny because I saw this throughout 2020. Every single month after the Federal Reserve's meeting or after the CPI data was released, the market was saying, okay, this is peak rates. Or they'll say, okay, inflation's peaked. It's time to buy the rally right now. It's time to buy the dip right now. Only for the markets to be very disappointed when they found out inflation was going to be sticky for longer and interest rates were going to have to go much higher. Remember, they thought it would just go to 2%. Then they thought, okay, just 3%, just 4%. Okay, just 5%. Well, now it's looking like we may be talking about 6 or 7% interest rates. And like the markets were trying to price in that there'll be cuts at the end of this year, well, maybe there won't be any cuts in 2024 as well. But okay, what is this huge risk that just developed over the weekend, everyone? Well, it's a few things. First is Biden's surprise visit to Ukraine. So look at this. Biden makes a surprise visit to Kiev in show of support for Ukraine. And he pledged $500 million of additional aid is pledged before the anniversary of the war starts. So something I think the markets aren't really thinking about is war is very, very inflationary. If this war escalates, if this war continues, a lot of countries are spending more and more on defense right now because they're giving a lot of their military supplies to Ukraine so that they have to restock their own defenses. But not only this is going to escalate the conflict because Putin, he's kind of been made fun of. He's saying this is embarrassment for Russia, and he's definitely going to want to respond. Because look at this, pro-Putin pundits are furious Biden made a surprise visit to Kiev, calling it humiliation for Russia. So I think over the next couple of days, we're going to see an escalation of the conflict and Putin go more on the offensive. But it's not really the conflict with Russia and Ukraine that's got me so worried, and I think what's got the market so worried. What's really worrying the markets is what happens if China gets involved. Because look at this, US officials address mounting tensions between US and China during security conference. So we already know the relationship between the US and China is getting worse, but there's just been recent intelligence has come about that says China is thinking of supplying lethal weapons to Russia. Now, I'm not going to go over if they should or not, but the fact is, if they do provide weapons to Russia, we're going to see huge amounts of sanctions on China. China would then probably retaliate with sanctions on the US. And if we get into a cold war with China, this is going to be very, very bad for global trade and for the global economy. Because look what just happened today. China's top diplomat visits Moscow ahead of anniversary of Russia's Ukraine invasion. China's top diplomat Yang Yi arrived in Moscow on Tuesday. Russian state media reported in the first visit to Russia by a Chinese official in that role since the Kremlin full-scale invasion of Ukraine began nearly a year ago. And like I was talking about, US Secretary of State Anthony Blinken said the Biden administration had concerns that Beijing is considering stepping up its partnership with Moscow by supplying Russian military with lethal support as Russia prepares for an expected new offense. And on top of all of this, another major escalation is Russia has ended its US nuclear arms treaty. So everyone, you don't have to be a geopolitical expert or strategist to see the relationship between the US and China is rapidly deteriorating. We're seeing recently that the US shut down the Chinese spy balloon, and now they're considering supplying lethal support to Russia. If this happens, like I said, there's going to be huge amounts of sanctions on China. Global trade is going to come to a halt, or it could possibly come to a halt very, very soon. And what that means is other companies are going to have to find other countries to produce their goods, and that's going to make inflation extremely high and stay high for much longer. Because we've had globalization, That means the US has been able to offshore a lot of their production, make the production a lot cheaper, and keep the prices of things down relatively low compared to the high inflation we're seeing right now. Even though in real terms prices have been going up for years, they would have gone up a lot more if it wasn't for globalization. Another thing the market is not prepared for, and what nobody's talking about, is what if this isn't just a short raise in interest rates and then the Federal Reserve's going to drop them down to zero next year? What if we're about to head into a multi-decade rate hike cycle? We just came from a multi-decade rate hike decline where interest rates have fallen ever since the 80s, then they've fallen in the 90s, then they've fallen in the 2000s, 2010s, and fallen in the 2020s. Well, what if that period of declining interest rates is over? What if we don't hit 0% interest rates again for decades? What if this is just the first rate hike cycle, and then like in the 60s, they lifted interest rates, they thought inflation went away, then they dropped them, only for inflation to surge again, then they had to lift interest rates higher and higher. And they had a few cycles of interest rate hikes before they actually hit the peak of 18%. So what if this is the first cycle of interest rates going up and we actually get to 10%, 15% interest rates in a couple of decades? So all these people are saying, don't worry, buy the dip, the markets will hit all-time highs next year, the following year. Just think about long term. Well, that may not be the case, everyone. Like what we saw with the Japan market absolutely crushing, it did not recover for 3 decades. And like I've been warning about, high interest rates is going to affect companies' earnings. It's going to make it more expensive to raise capital. It's going to make it very expensive for startups, and it's also going to mean that growth stocks, their valuations are going to have to drop. And we did just get a new earnings report from Walmart, which is giving us some insights for the future. So look at this. Walmart gives soft outlook for the year after posting a strong holiday quarter. So yes, while they did have a good holiday season, that's a lagging indicator. That's in the past. We want to look to see what's happening in the future. So the big box retailer gave a weaker than expected outlook for the year ahead. Walmart CEO said shoppers are still buying fewer discretionary items as grocery prices remain elevated. So this is what I've been talking about, everyone. Yes, while earnings have been okay so far, that's because some people may have had some savings. That's because, like we've been seeing with the data, people have been living off their credit cards, but they can't keep on living on their credit cards forever. Eventually, their debt's going to get maxed out. And with the average interest rate on a credit card now around 23%, people simply aren't going to be able to afford to take on debt much longer. And they don't have much savings left over now. They're not getting the stimulus checks anymore. So they're not going to be able to keep fueling this spending habit that people are in, or the necessity spending they're having to do because the prices are so expensive. So eventually we're going to see these companies' earnings grind to an absolute halt. So everyone, I think the markets have 2 big, massive risks to have to worry about. Not just high interest rates now, but also the geopolitical situation getting much, much worse between the relationship with the US and China. And if this worsens, we're going to feel these flow-on effects throughout the whole world, because the US has a lot of allies with the West. And so that means a lot of these Western countries, they'll probably see less trade with China as well, and possibly put sanctions on China as well. So everyone, like I tried to warn you about this market rally, it was rallying off nothing. There was no fundamentals to say why the market should rally. Sometimes the markets can just rally off momentum, off irrational exuberance. We call it bear market rallies. Sometimes the market makers or the algorithms try to manipulate the market to bring retail sucker investors in, only for them to dump on them because they're trying to get their stocks out, trying to get their money out of the stock market before a good price, before they know the real crash is coming. But everyone, what do you think about all of this? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.